Welcome to the Swing Trading with Cycles channel. We're going to do a single stock edition today, Disney. So this is October 17th, by the way, but these single stock editions are pretty big picture. So we'll start with the we'll start with the annual chart as we usually do. And in this case, we'll actually look at a two-panel of, Disney versus Disney divided by the S&P 500, right? So on the right here, this is a ratio chart of Disney versus the S&P 500, and this is just a chart of Disney itself. Both annual charts going back to 1968, right? So going back to 1968, and so you can see it's been a huge uptrend. Disney has. There was these two big down years, 1973 and 1974. Big lower low on the yearly chart. That's a big pattern, and then made another lower low on the yearly chart. Those are massive swing highs. If you know, hopefully you've seen that video, the video around swing highs already. That's how you identify a major market top. And clearly for Disney, that was for at least this period, because notice that after this massive swing high, and then you have the follow through the next year, you then had a bit of a rebound, but then essentially just consolidation. You just kind of drifted higher a little bit. What is that? 1, 2, 3, 4, 5, 6, 7, 8, 9 years of kind of not doing much. And then you have the real explosion higher. And then this is your higher low, an important swing low. And the question now, this becomes an important swing low, right? This technically is an important swing low as well, actually. That's another significant swing low. So now this is a significant swing low that's about to be tested, right? That is the one from the COVID crash. Let's zoom in here. And that's right around $79. So that's another, $10, $12 down from here. So not even that much in terms of percentage. When you think about the fact that we were up here around $203, we're already down well over 50% here. But that kind of gives you a sense that, we could still, we still may have some washout to go. Like if you take out the low from, 2020, man, that's wiping out all the gains from, 2 years ago. And then that kind of opens up the possibility, for a false breakdown, right? We overshoot that level to the downside, and we get a violent move up, or you get more consolidation and a move lower. And in that case, your next kind of area is around $70, right? That's your low from 2014, which actually started, like, you could even say this is like a, this is 4 years of kind of doing absolutely nothing. It's consolidation, 4 years of consolidation, but at the upper end of the range after this up move, which follows these two moves. So if you're thinking about it structurally, that could be an important pivot point, a kind of an undershoot. So around $70, so another $20 of downside on a $91 stock. But there's going to be a great opportunity for this thing at one point. Content is king. Disney is the king of content. I think there's going to be an opportunity, just like this was an opportunity in 2011 ended up being, right, once we crossed above that. And you'll absolutely find some links in the description to, if you haven't seen the video, how to tell when you've hit a market bottom. This is an example, right? That swing low in this is a year, what year? 2011, right? Above 44.34, that got you all the way up here, right? I mean, we're obviously way above that now. So the question is, how does this look versus the S&P though? Because the reason that that's important is you can always invest your money in the S&P, the index, and you get a less risky return. And so if you're going to get a better return with the S&P, why even bother, right? And you can see, interestingly enough, Disney actually peaked against the S&P back in 2015. That's what this is, this year. So ever since that year, that year was a big swing high, right? Again, the kind of market top. And notice this is 2015 for Disney, the absolute chart. So you had those 3 years. You had 3 years of kind of nothing burger. I mean, look at these little dojis that we kind of talked about. And then you actually made a new all-time high. And, for actually, your all-time high here was in 2021 at the $203, right? So, but versus the S&P, you did not make a new all-time high. What that means in plain terms is since 2015, you would have been better off investing in the S&P 500 just by SPY versus Disney, because you would have gotten a better return. Because I mean, this is what you got. Like, and we're obviously both instruments are down, but clearly Disney is down way more than the S&P, and it's not up as much as the S&P since the 2015. So that's really interesting, and that is also something that we're going to want to watch for on these charts, because clearly there are periods where Disney is massively outperforming the index, right? You can see this period here was a big chop zone, albeit in a large range, right? But this was a very clear period of outperformance. This, from its IPO, I suppose this is huge outperformance, right? Even this period was a pretty good year into the 2015 top. And so at some point, you're going to get that move again. And that's going to be your time to go heavy Disney. That's a general framework for how I'll be looking at these single stock updates, because then it gives us an opportunity to understand not just when we're in an uptrend on an absolute basis, but we're also in that sort of glide path where we're massively outperforming the S&P, because that's what happens. That's what strong leadership stocks do. They outperform the index. They just don't necessarily do it all the time. Just like everything else, it moves in that zigzag pattern of, at some points you're going to get a rally and then the retracement, rally and then the retracement. In this case, this was mostly in an uptrend. You can argue it maybe still is in an uptrend unless we break below this level. But we'll be watching that. I'd say on the Disney chart itself, that level that's really important is crossing back above, let's say 98. I think of that as almost like it's waking up. And so if we zoom in here, let's look at the monthly chart, I guess. So if you think about those annual candles we were just looking at, if you grouped 12 of them at a time, 12 of these at a time, you'd get those annual candles. What I'll say is this whole structure here, so this is November, this whole thing is essentially a bear flag of this move down, right? So you can kind of think about it in these terms. So we did this, did that. This is very broad strokes. I'm not drawing every single move. And then we're doing this. Maybe we do this, and then that, and then that, and then that, right? That's not a prediction, just kind of a scenario. But more importantly, kind of drawing out the fact that, I guess actually we kind of did, it was actually like that, right? And then that. You don't have to get too pedantic about this, but that's the point, right? You kind of want to have the structure in your mind, where are there higher highs and higher lows, right? So that. So now it's a question: are we going to rally a little bit? And we'll look at the lower time frames to try to get sort of sense of that, right? If we look at the weekly chart, I'd say the answer is no. And the reason is that you think about the way this has played out, and I had been tracking this cycle wise for a little bit in the past. You can see these cycles are pretty long, in the 20 to 29, 32. In this case, this was 40 weeks long. And a lot of these in the past were in the mid 30s even. Best I can tell, we seem to be on week 18. I'll zoom in here. We seem to be on week 18 of a long-term cycle, of a weekly cycle, right? And so this last weekly cycle ended on week 32. That was the week of July 11th. We then rallied for 5 weeks, and then we came down, made a lower high, and now you imagine we're going to make a lower low below this wick here. And as a coincidence, the last weekly cycle that was 32 weeks long, it also topped out on week 5. And you can quibble and say, wait, was this actually the weekly cycle low? Well, sure, but then this was the rally. Either way, it was you have your weekly swing low, because this is a weekly swing low. It's you're going to have weekly swing lows along the way, and you can quibble about which is the cycle low. But if you notice the pattern of feeble rally and then fail, feeble rally, fail, right? This was just not even able to pull a rally together. It looked like it was about to fail, and then we got this, which is actually a pretty strong rally compared to like these and these, but then we gave it all back, right? But not, but well, this right. So you could argue this is a little bit of a double bottom kind of situation, but then we did this and produced a lower high. This being a lower high than this versus this, and of course all of that stuff. So now, do we consolidate inside here and hold above this low? That's certainly possible. That becomes a really important level. Let's just make sure we have that level exact. It's 86.28 is the level that you want to. That's the low from the previous week. If we fall below that, that tells you just incontrovertible evidence. We're definitely continuing to decline in the weekly cycle. In the weekly chart, same difference. You would just assume we are declining. Again, you look at the monthly chart. Although we do have this little lower wick, and let's zoom into the daily chart and see what's happening with that lower wick. So this is a little low that we're trying to hold here on the daily. That was another low. That was another low, right? These are all little swing lows that on the daily chart now. So you see it's the same pattern. We're getting feeble rallies off of swing lows on the weekly, and we're doing the same thing on the daily. That makes sense, right? Because they're both functions of each other. So this seems to be a daily rally that's failing, right? And so we're actually holding right where you would think we would need to hold, right? Like somewhere around there. So that's going to be interesting. Let's see if this gives us a little bit more of a rally. Like, look at this. This was feeble and got stamped out, but at least ran a little bit longer. But all that to say, a lot of downside ahead. I mean, at least a few $10 to $20 worth of downside, you would think, before maybe we get a little bit of a washout. Right, so everything is really set up for downside here in the near term, and really maybe for the next quarter. And again, this is November, so we're talking like January 2023, probably also not looking good. This is your quarterly chart, just on all the time frames, not looking great. I mean, look at the last candle from the last quarter. I mean, what an ugly bearish signal, right? And so this is like set up for another swing high, right? Like we've been making quarterly swing highs since, what was this? So early 2021, right? We like next quarter's consolidated, then this next quarter went below that quarter's low. This quarter went below this quarter's low. These are all swing highs that are basically reversing this entire move here when we've already done that. So now again, it's a question, that awkward question of, are we going to test that COVID low? We could see a violent springboard reaction off of that. So that's going to be really interesting to watch. And anything else that's worth pointing out? I think that's it. So again, we are going to want to see how it behaves versus the S&P. I mean, let's see on a monthly chart, because that's the thing. Nothing is going to move in a straight line. So there are going to be intervening periods where, you know, it's doing a little bit better than the S&P, like for a month or so. So that's a good example. So like August, it outperformed. Like, you know, we had this little 2-month rally. So you think about this. This was all consolidation. So we had this big move down. This is the ratio, again, Disney versus S&P. Then we consolidated, another leg lower, consolidated. So this leg lower probably isn't over. I think so at the very least, you're still going to underperform being in Disney versus the market. And that's not even saying whether the market is going to go up or down realistically. But it does tell you that this is probably not the time to take a risk-adjusted bet on Disney. But at some point there probably will be, right? Like you see this. I mean, this was a very long period of outperformance, right? Even within that, you're going to see big pullbacks, right? But now, this kind of waterfall decline at some point is going to cause some kind of springboard. And we'll be watching for that.